Chinese stocks are erasing losses from earlier today after the central bank left its medium-term policy loans rate unchanged in a surprise move. Taiwan stocks are also rising after voters handed the ruling Democratic Progressive Party a third straight presidential term. The Taiwan Weighted Index is up 0.2%, and Taiwan Semiconductor Manufacturing, TSMC, that's the world's biggest contract chip maker, is up 0.8%. Analysts, though, warn that the new president-elect Lai Ching-te is to face lots of headwinds in the days and the years to come, as he is considered a die-hard separatist in the eyes of mainland China. For more, let's bring in Tim Waterer in Sydney. He is Chief Market Analyst at KCN Trade. Thank you for being with us today. Right, so how do you see markets reacting in the long term to the new president? I mean, we are seeing a good reaction so far because he is seen as a die-hard separatist, and really analysts are really warning markets that there could be consequences.
Well, nice to be with you again. Well, that's right. A modestly positive reaction so far. But longer term, the proof will be in the pudding, so to speak. Because if we look at the results of the election, yes, the DPP won, and there's some continuity there, going into their third consecutive term. So that provides some comfort to markets, at least in the short term. But on the flip side of that, they lost the majority. So legislating will be a more difficult task. So I think, when it comes to Taiwan, it's all about, how the new government can sort of look after the semiconductor industry in terms of, whether that will placate markets. As we know, the semiconductor industry, that accounts for over 15% of GDP in Taiwan. So I think the challenge for the new president is, can he look after the existing relations from a trade perspective with the US when it comes to those, big semiconductor stocks, while not earning the ire of Beijing? Because I think that the concern overhanging the markets at the moment in relation to the Taiwan story is, could there be some retaliation down the road from China in the form of sanctions? Should that pro-separatist stance sort of come to the fore? But I think he'll probably have to find some middle ground, try and get some policies passed, look after that sector, and so it's a fine line he needs to walk. But markets will be certainly waiting and seeing to see what happens to that semiconductor sector and in turn GDP going forward.
Right, and let's go to Beijing then for a minute, because the central bank held rates. It was widely expected to cut rates, actually, at this economic juncture to revive the economy. So what do you think the central bank wants to signal now?
Yeah, interesting decision that we saw today. I mean, I think it was sort of a bit of a line ball what they would do. I think on the one hand, it's shown by, holding rates where they are, it's signalling that they're not hitting the panic buttons at the moment. And that's because, while we have seen, mixed data from China, there are some positive signs. Looks like they can still hit that 5% GDP target. Industrial production has been edging higher. We'll await, new figures on that front later this week. So I think they're wanting to hold fire at the moment, but still keep it as an option up their sleeve down the road if things continue to head south. So I think that what played into the decision today is that ongoing weakness in the yuan. The currency from China has lost 6% over the past year to the US dollar. So if China starts aggressively cutting rates, we could see further weakness in that yuan. I think the PBOC officials, they're probably wanting to see how things go in the US this year. If the US Federal Reserve starts cutting rates, that would take some steam out of the US dollar and perhaps cushion the yuan and allow more scope for the Chinese officials to try and stimulate growth maybe later in the year by looking at, say, the 5-year and the 2-year MLF rates, and maybe cutting those a little bit to stimulate growth. So I think that's sort of the game plan at the moment from the Chinese officials. Just wait and see for the time being, keep an eye on the yuan depreciation, and perhaps start cutting a little later in the year.
Very, very interesting analysis there on the Chinese and Taiwanese economy. Tim Waterer, thank you very much.
Thank you.
And now let's go to other top stories from around the world. Higher interest rates and inflation are continuing to worsen wealth inequality in the world. According to Oxfam, the world's 5 richest people have more than doubled their fortunes to $869 billion since 2020, while the world's poorest 60% have gotten poorer over the same period. The charity also said the world will have its first trillionaire in a decade. Apple is offering discounts on its latest iPhones in China as it faces stiff competition in the world's largest smartphone market. In a surprise move, the US tech giant cut retail prices by as much as $70, equivalent to about 5% off its top-of-the-line gadget. Sales of Apple's latest iPhone 15 have been far worse than previous models in China. And Romanian farmers and truck drivers have protested across the country over high insurance rates and slow subsidy payments. Convoys of tractors gathered on national roads, blocking and slowing traffic. The protests have also briefly blocked a crossing with Ukraine in northeastern Romania, as well as preventing entrance to the Black Sea port of Constanța.